Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what is going on today. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, looking for potential investment opportunities, sharing those opportunities with everybody in the community. I do have a strategy that I deploy. I am not a short-term trader, although I do time my purchases using technical analysis. I used to be a swing trader back in the day, but now I size up the big moves and invest for longer time frames and horizons for the big moves. That's where I found a lot more returns than doing anything on the short term. If that's something that interests you, definitely subscribe. We've got the special coupon code in the corner there that works on the monthly and yearly membership. If you're a monthly member and you'd like to subscribe longer to a yearly membership, you can obviously transfer over and still use that code, even if you've used it on a monthly membership for just the first month savings of 50%. So Robert Friedland, he's got platinum and palladium, the next bubble. And he's not saying we're in a bubble. He's saying that that could develop out in the future. Platinum is the cheapest metal of all of the precious metals on a ratio perspective. Platinum's cheap against gold, it's cheap against silver, and it's cheap against palladium. So let's go in and look at this article real quick. Clem Chambers is the one who wrote this article here. And of course, they've got some awesome advertisements that pop up. So we had a big move in platinum. You can see platinum moving up, massively big breakout there. Yes. Now it's $1,400. He wrote this first thing at 1,000. Okay, gotcha. Couple of things I want to show you here. This is palladium, and I don't know what the bottom one is here. ETF, Sibanye, Stillwater, not a fan of pricey or difficult to hold stocks. This is why physical ETFs are his preferred instrument. SBSW sneaks in only as a stock the only stock I can stomach. That's what he says. Looks like that's platinum, palladium there at the top there. So platinum's the black, palladium had that big run. Platinum did a real huge consolidation. It's been consolidating since 2008. This was kind of the dead period all through here, and you can see platinum starting to outperform palladium on the right-hand side. So it says, in an old market parlance, palladium is the fast horse. But like the market stall trader selling steak knives, I have to say, that's not all, mister. Take a look at this. So this is history looking back. Gold is the green. Blue is blue is palladium. Platinum is the dark black in the bottom there. You can see throughout history, since these are scaled to just sheer pricing, not a percent scale, it's just sheer pricing, that the ratios have flipped. You can see that gold is now more expensive than palladium and platinum. And platinum, whenever platinum's underneath palladium, platinum's cheap. Historically, platinum has traded a lot more expensive to palladium. In fact, there were times in history where platinum was 5 to 6 times the price of palladium. Also, as weird as this is, there was also a single time in history where platinum was 5 or 6 times the price of gold back in the 1920s, early 1920s. Today, that is reversed. Platinum, at least here when we were buying it in this section, all through here, this is the cheapest it's ever been against gold and palladium, specifically here for palladium. So as weird as it is, I also swapped my metals. My palladium, when platinum dipped here, I swapped my palladium when it was up here to platinum. It was a great swap from a ratio perspective. But he says this chart tells us the story of platinum and palladium following gold. You expect that, but what you see in 2016 was how gold and platinum used to be valued. They were 1-to-1. That parity is gone. Why wouldn't it return? Production is 3,200 tons for gold and 200 tons for platinum. And for a very long time, platinum was more expensive than gold, just as it is for Rolex owners today. From this chart, you can also see how their prices can explode. As platinum did in 2020 to 2022, the supply is tight because production is so small. In consequence, I'm very much talking my own book because I'm well vested in platinum and palladium. This technical setup looks spectacular, and the fundamentals are there to back it up. When I start writing about platinum and palladium, it was contrarian, but not anymore. And that's from Clem, and I agree with all that. I use the ratios to basically funnel out everything. It just to scrape it down to bare minimum. The ratios are what tell you something is a buy or not. It doesn't tell you exactly if it's going to turn immediately or if it's going to take some time. That's what the technicals are a little bit better for. But platinum and palladium, given where their ratios are, we can go over that real quick too. We can go platinum to palladium. This is the ratios and the cycle there, and this is where I think a great time would be to swap out was that circle there. You can see that platinum's been outperforming palladium as it goes up, and that is in effect very worthwhile to me because now we're at 1.1. What does that mean? It means I swapped my metals at 0.3, just over 0.3, and now I'm at about 3x the number of ounces that I hold of palladium. So whatever I swapped of palladium ounces, I'm over 3x that now, which is great. It's great. And hopefully we get up here, which could be a 15 times my metal if we were to get up there. 15 if we get to 5. 15 times my metal. Does that make, that's just ludicrous. Name something else where you can do that. And then here's platinum versus silver, a ratio that's really low and a falling wedge. And look what it's done. It's broken out. It's broken out. Could we see silver run and platinum run faster? We could. It's a possibility. I'm not stating that that will happen. I'm stating that it's a possibility. And if that were to occur, let's say silver goes multi-$100. Could you imagine what platinum would be priced if it gets back up there at the same time it does that? How ludicrous that would be. From a dollar perspective, and I use a lot of ratios, but let's bring up the good old calculator, right? If silver goes to say like 200, and let's do 100, $100, right? And we go to a ratio of 1 to, let's say, 130 here. So that means that we're 130 times. So we go 130. That means platinum's $13,000 an ounce. I don't know if it's going to get there, but something like that could occur. Or let's say they don't reach it at the same heights. Maybe platinum, let's say silver's at $40. We could use the current price. 40 times 130 would give you a $5,200 platinum price. So somewhere between $5,000 and $10,000 could be a potential price or more of platinum if we get to historical ratios up towards this peak here. This peak was basically the beginning of the bull market of commodities, and I think that's going to go all the way up here again. So the big question is what's the silver price going to be exactly? I don't know. All I know is platinum's going to go way up. And then platinum to gold ratio to show you guys what that looks like. We recently, this is ridiculous how cheap it got, guys. And I bought whatever I could when I could. So here it is breaking out. You guys see that breakout there? And we're starting to break the more recent trend line, that upper trend line, the top one here. We're starting to break through that. This is going to get all sorts of awesome here for platinum. And yes, I loaded the boat, man. You guys are part of the website. You guys obviously know that. But I did originally start purchasing here, thinking that it was going to break here, and I've been a purchaser of platinum since that time frame. On dollar terms, it went sideways, so I purchased a whole bunch here, and I purchased basically that entire block right through there as I cost averaged in during that time. That's how I did it. I used the ratios, I used the technicals. I thought that this was a three hump consolidation, and I thought the breakout here was going to get me up and out. But we consolidated longer for a little bit longer than what I originally planned. But it doesn't matter. I accumulated a gobload more down here than what I would have if it had broken immediately. Um, Against all odds, it says the 30-year yield is close to breaking out. No hikes, no fear, just growth and inflation. When the long end leads, copper, gold, energy, rip. Completely right. He is completely right. Copper's sitting on top of its pattern. Gold's already ripped, and energy is about to rip, in my opinion. If the Fed cuts, it's added fuel to the fire. Correct. He's 100% right here. The next leg of the commodity bull market might already be underway. Completely agree with that too. I'm seeing a lot of early stage moves in the energy sector, fertilizers, lithium starting to take off. Those are all inflation sensitive assets, guys. Gold or copper is sitting on top of its pattern. Silver sitting on top of its pattern. This looks like across the board fuel for a big move of everything. Down here, he's got gold, copper, and oil. Gold's broken out, copper's breaking out, and oil is still lagged behind it. Now, people will say, buy the breakout. BS. If you know this correlation exists, I would go look at oil companies that are down the most and buy oil, which is different than the chart technical readers. I'm buying value here. Now, there's other things that are even well set up with these. Other sectors that I'm participating in that have even more leverage than these. And I know you guys are wondering, what is that? Tell me what it is. Well, we're participating in it on the website. That's what I'm doing. I'm looking at the big moves and getting early entry points for everyone who wants to participate and make the most out of this bull market. I know everybody wants things for free. I get it. But I got to save some stuff for my boys over in the community, my boys and girls over in the community there. Reads with Robbie says the secret of life is deceptively simple. It's having something to look forward to always. It doesn't even matter how small or mundane. And you know what? That's 100% right. I was thinking about this. It's always better to have something to look forward to, whether it's hanging out with your buddies on the weekend when I was younger, whether it's doing something on the weekend with your friends or family, or that trip, or maybe it's something that you do, whatever it is. Maybe it's playing a Friday night game. I don't know. It's always better to have something to look forward to. It doesn't matter how big or small it is. And maybe that's something to start doing if you're not doing that already. Just an FYI. Canadian Dividend Investing says David Rosenberg predicted 63 of the past 3 recessions. Garth Turner was wrong about Canadian real estate for 15 plus years. Harry Dent has a series of books predicting doom that never got close to coming true. All absolutely dismal records. Follow perma-bears at your own peril. I used to follow this stuff, guys. I did. I used to follow all of these guys. And let me tell you something. This is my experience. It didn't work out. I used to follow all of them. A lot of people making predictions, a lot of people saying, oh, it's going to go up, it's going to go down, it's going to do this, it's going to do that. That was not the right strategy, and it's not the right approach. And I know a lot of people, I'm on YouTube here, and a lot of people follow other YouTube accounts, and I just don't think that's the way to make money. The way to make money, what I've found, and I'll share this with everybody, is you need to chase value. Value will keep you out of harm's way and will keep you in the sectors that are bottoming. You can use technicals to time your entries, but the big factor that a lot of people miss is value. Value is a part of the cycle. Value is the only thing that you can objectively say with certainty exists. So you can't with certainty say that something's going to go up based off of a chart pattern. You can't do that with predictions. Elliott Wave can't do that either. Um, what those things are trying to do is they're trying to project or give you an advantage based off of how people are positioning. But it isn't perfect. And in the short term, things can look like they're turning up and they can go in the opposite direction. But if all you know is the chart and you don't know anything about the company that you own, it gives you zero conviction to stay in it. So what happens with technical chart trading is that you have absolutely no conviction of a longer term cycle or move. You don't have any wherewithal of the value of what you're buying or the overvaluation that you're buying. So in technical analysis only, if all you're doing is trying to read the charts, I would say that you're leaving out the most important thing of the cycle, which is your valuations. Now, if you can compare multiple things, that and become a hybrid, that's what I would self-identify as a hybrid, where I use fundamentals or valuations and technicals and some other things, cycles. That's kind of tying it all together. So what you can do is if you have valuation on your side, and let's say you messed up a technical trade, you can stay in it. Time is your friend. You can wait things out because the value's on your side. It's a form of cushion and a margin of safety. If all you're doing is technical analysis, you have no idea what the hell you're buying. It's straight gambling at that point. And is why I don't do it. I don't technically trade only. And I view that as a very dangerous approach. Now you can use technicals and you can use charts to determine market conditions, but you don't nail the market conditions perfectly all the time. So you can pad yourself, you can pad it with a bunch of undervaluation. True market leader says in the stock market, you're playing probabilities, not certainties. That means you cannot be correct all the time. If you make more on your winners than you lose on your losses over time, that's all you need to accomplish to be successful. And that's true. And asymmetry helps you out here too, because if you've got absolute killer upside, then your small losses, which may be confined to the 100% that you put into it, which is your portfolio allocation amount, will overcome. It'll be bigger wins than your losses. Now, what could increase your probability of success of choosing winners? What gives you the most asymmetry? What gives you more padding or margin of safety? And can you combine everything at our fingertips of technical analysis, cycles, and valuation together to get a higher probability of success? Correct, because you're playing with probabilities and not certainties. So how do we maximize our probabilities and how do we maximize our asymmetry? Right? That should be your question, and that should be the strategy that you deploy. Now, I've watched a bunch of different strategies that people deploy. I've seen Buffett. I've seen Howard Marks in the strategies that he uses. Peter Lynch, Stanley Druckenmiller. And there are other people too. George Soros and others. I do think that Buffett's strategy and some of his approaches are superior to others, and that he's developed and refined over the long term. Other ones, what they do is they see market conditions where the pricing and the market conditions are offset. So let's say that Stanley Druckenmiller sees a market condition that he thinks exists. And what he does is he tries to take advantage of the market maybe lagging behind a changing market condition. So if there's asymmetry in the trade, he'll put on a large trade of, let's say, the market is slowing, the yield curve is uninverting, and then he'll put on a trade in, say, the bond market, thinking that bond prices will go up as yields fall. Something like that could occur, and he uses some technical analysis and whatnot. But that's not anything that Buffett would do for a trade. Buffett would do an investment and says, I don't want to worry about the market conditions at all. What I'm going to do is he's going to buy undervaluation in relationship to the intrinsic value of the business. So that's kind of what he would do in the two different strategies. I think that Buffett and that strategy is superior to trying to exploit a condition in the market, in my opinion. Now, is there a way that you can combine both market condition valuation together? And I think there is. And I think that's also the most powerful thing to do, is to start to combine strategies of these guys to adopt pieces of strategies in all this. And I think that's probably what I might do and go over in the next Q&A session that is going to be performed on Saturday here for the members. Money may rotate out of gold onto energy for a while, or into energy for a while. That is very well could be the case. We could see gold chop sideways and money flows start going into energy. We could see both take off together as well. Generally, when we see a weaker dollar, and maybe a weaker dollar comes, maybe it doesn't. Again, that's the market condition that we're trying to get right. When the market condition changes to a falling dollar, gold, silver, copper, energy, they all go up together. That's what occurred from 2001 and on in the last bull market. I think that's where we're located. So a lot of people are trying to game and time the market here. And maybe they'll be in gold, maybe they'll swap it to silver, maybe they swap it back to energy. I'm in the camp that these all could go up together depending on what the dollar does. So be careful of that too. Physical platinum in the NYMEX vaults. In just 3.5 months, the amount of physical platinum backing all of the NYMEX future contracts registered category has dropped or been delivered out of vaults by 64% since April 1st, 2025. Total inventories have dropped by 56% over the same time frame. This is going to get tight here, guys. It's going to get super tight in platinum. And guys, when they talk about inventories dropping, the dollar value of platinum inventories is ridiculously small. It is super tight because there just isn't that much platinum in the world. There just isn't. So we're going to get super tight here in platinum, and I think prices could explode. My wife accurately noted today that since COVID, there's been a notable decline in just about everything. It's subtle, but it's everywhere. Can't even really explain it beyond the deadweight loss of wealth and vague hand waving about the broken social contract. I think that's true. I feel it as well. You know what else has happened? We've seen an increase in interest rates since 2020, 2021, which was the bottom of the market. And this is what people are feeling. They can feel it. A change is upon us. A paradigm shift is occurring underneath. The commodity bull market has started. and it's gonna accelerate. Things are gonna get really bad here, guys, when it comes to inflation, and I think it's gonna get bad with the pricing of commodities. Things are gonna get more difficult. It's gonna get more difficult. People are gonna feel it. It's gonna come, and this feeling here that I just spoke about, people are gonna start to act on it. They're gonna change the way that they are investing, even, and they're going to change their lifestyle and spending habits as well. QE Infinity says, after today's hotter economic data following hot CPI, why on earth would you cut interest rates? The economy is strengthening. Correct. That is true. That's why platinum's breaking out. That's why copper is sitting on top of its pattern. It's all interconnected. This is what I believe, and this is Munger on U.S. oil production in 2022. He says, I have a different view on the subject. I like having big reserves of oil. If I were running the United States as a benevolent despot, I would just leave most of the oil we have here, and I'd pay whatever the Arabs charge for their oil, and I'd pay it cheerfully and conserve my own. I think it's going to be very precious stuff over the next 200 years. And nobody else has my view, so it doesn't bother me. I just think they're all wrong. I agree with him. I completely agree with him. I think we're going to have an oil crisis at some point, sooner than later. And guess what? It would be better to buy it from everywhere else and deplete their resources first than ours. I am in stark contrast with drill, baby, drill. But I will say this. All major oil producers in the world, almost all of them, are very wealthy countries. They're very wealthy countries. Those with the most resources are very wealthy, the majority of them. Now, those that have no resources or aren't extracting the resources generally are not as wealthy. So what does that mean? Wealth is commodities. All wealth is supported by commodities. The conversion of commodities into wealth, that's your cars, that's your equipment in your house like refrigerators and washers and dryers. It's all converted commodities into designs that creates wealth. Brandon says, everybody wants those Charlie Munger partnership returns, but nobody wants to endure 2 consecutive years of minus 30%, says Ronnie Coleman. Here's his returns, massive returns coming here. But look at the 73 and 74. He had some massive pullback, minus 32 and minus 31.5% here. So he had some underperformance during some of those years, the way he was positioned. His total return was 1,156% from 62 to 75. And the Dow Jones was 96% and 102% for S&P. But people look at these 2 down years and they want to avoid the losses, although the return was absolutely mind-numbingly blew the other ones out of the water. Here's something just to let you guys know. My 2-year return on from 2000 to 2020 to 2022, in those 2 years, I had a 900% return on my entire portfolio, which I basically almost matched Munger's return. I had a 5-year run because I calculated it in 2023, I think was my 5-year annualized return was over 41%. And I think I could have beat that even more if I had known what I know today. I would have beat my own return. Now, it dropped a little bit with last year. Last year, I had pretty much a flat year, discounting taking out my precious metals, because my precious metals were up quite a bit. So I didn't include that. So I was still up that year. And I didn't include in the 41% my precious metals holdings. If I did, it probably would have been just a slightly lower, um, because precious metals were moving more sideways during that time frame. Um, so if I include precious metals, then last year would have been an up year, probably decently, because silver was up quite a bit, platinum was flat, and gold was up a lot. So I still would have ended the year quite in the positive. But this year, yeah, I'm up massively this year. Some of my silver companies went up huge. Platinum's up over 50% this year. I have a big chunk in that. Silver's way up. I don't even, I can't tell you what I'm up. I haven't calculated it, and we'll see what happens, but it's probably up 40, 50% or something like that on everything. But if energy starts moving here too, which it has, that's really going to start to push those returns up. So yeah, I'm probably, I don't know. It's tough, difficult to say. I don't know what I'm up this year, because I have a large stake in physical metals, so it's tough to say. But I think this is easily beatable, with the conditions that we have today. Um, I also think that a lot of other strategies, I think we can beat it. So yeah. Why do NASDAQ and Bitcoin never go down? They can't. Why does oil never go up? That can't be allowed either. But Mr. Market will have the final say. I agree with that. Um, I think we're entering a time frame where NASDAQ and Bitcoin, I think NASDAQ could underperform at some point. I don't know if we're there yet. It continues to go up. Bitcoin, I think, is just a multiplier on the NASDAQ. Oil, oil's well positioned. I think we're going to go way higher in oil. Um, so let's just say over the next 5, 10 years, it's going to do crazy stuff. So will I eat some underperformance in the short term? You bet I will. And I will continue to buy what the undervaluation is. So that's what I see there. But that's what I've got for today, guys. So that's where we're going to end it. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special is that coupon code if you'd like to join. We have a Saturday question and answer session coming up, 7 a.m. Mountain Time. So we'll see you there. And that's all I've got for today. See ya.